Hello, Stephen Koukoulas here, Economist in residence with Zagga. And what a month we've seen for the economy. Now, we've just had the RBA leaving rates on hold at the end of September. No surprise to anybody that that was the case. And when we look at what the RBA was saying and why it kept rates on hold and why the market consensus, it was unanimous that there'd be no move in rates, there's been some encouraging signs in the economy in terms of economic activity. Household spending growth, which feeds into household consumption, which is over half of GDP, has started to pick up. We, you and me, we consumers are starting to see the benefit of lower interest rates. The fact that inflation has fallen and wages growth has picked up a bit. So real wages are increasing, so our purchasing power has improved. So that's one part of the economy that's looking better. We're not strong, but we're certainly off that low point of a year ago. We've also got consumer sentiment lifting, business confidence lifting. So the sort of soft indicators of the economy, the sentiment and those sorts of readings on the economy are better now than they were 6 and 12 months ago. And they're usually a good leading indicator to what's going to be happening in the economy over the more medium term, 6 to 12 months that is. On housing, I was hopeful for a housing construction pickup, but just the last 2 months, the number of house dwelling building approvals has tilted back down, mainly in the apartment market. That could just be a timing issue. 1 or 2 large projects have been postponed. So we don't want to get too gloomy that the housing construction pickup's faltering, but we do want to see it start to pick up over the next few months. And I think with the interest rate cuts that we've seen to date, 3 of them since February, just take note, they'll still filter through the economy and through borrowing costs and these sorts of things coming up. So we will see, in my view, a pickup in construction activity over the remainder of this year and certainly into 2026. And at the same time, we've got house prices doing very, very well, rising strongly again across all cities. The affordability issue is sort of a challenging one for many first home buyers, but we do know that immigration's been stronger than we were thinking at the start of the year. New supply has been weaker than we thought at the start of the year. In fact, the totality measure of listings, available houses for people to buy, is 20% lower than the 5-year average. So there's not a lot to choose from, in other words, for the people looking to buy a house. The other indicators of the economy, inflation is in check. The monthly inflation numbers can be very, very volatile, and we do know that headline inflation is and will be still impacted by the ending of some of the electricity subsidies. So the focus on the trimmed mean inflation rate is very important. It's running at 2.6%, so basically the middle of the target band, which is good news. The labour market's cooling off a bit. Employment growth has stalled just in the last few months. Employment gains are well below the increase in the labour force. The unemployment rate's ticked up, 4.2%. A few months ago it was down at 4%. So again, nothing horrible, but just a sign that the labour market is perhaps cooling off as well, as a bit of an offset to the better news on the domestic economy. So for the here and now, it looks to me as though the rates are going to be on hold for a lot longer. I think that we've got to be now into this sort of mindset that don't expect aggressive rate cuts in the remainder of 2025 and perhaps into 2026. A lot can happen, of course, to change that view. But for the here and now, the RBA is pretty content where things are. It thinks policy's about right. Now, if there is a move in the next few months, it'll be down, not up. So that's one thing to bear in mind. But the economy's looking a little bit better. So looking forward to talking to my friends at Zagga in coming weeks and months as the economy continues to unfold. But for the here and now, economy doing okay, 6 out of 10. Interest rates probably on hold. And it's us consumers that are going to be driving any pickup in economic activity. So watch the retail and household spending numbers for a sign about whether that strength is going to be sustained into the new year. So thanks very much. Looking forward to seeing you at the next Zagga event.